This is Ag Matters PM from the Iowa Agribusiness Radio Network, brought to you by the Iowa Soybean Association. Your daily recap of the information that affects Iowa's farmers, producers, and consumers, right here in the heart of the heartland. With reports from our award-winning broadcast team of Dustin Hoffman, Riley Smith, and Mark Magnuson. Now, from the IARN studios in Des Moines, here's Mark Magnuson.
Hello and welcome into Ag Matters PM on the Iowa Agribusiness Radio Network. I'm Mark Magnuson. Today is Tuesday, December 12th, 2023. So glad you could join us for today's show. In today's episode, I will be joined by Dr. David Newman with the National Pork Board. We will talk about demand and also market growth in international markets. We'll also have a check of the ag weather outlook, but first, let's run down the closing markets.
It's time now for the Ag Matters PM Closing Market Summary, your source for market analysis and settlement prices from the day's trade in Chicago, courtesy of the folks at agmarket.net.
At the end of another trading day, I'm joined now by Ross Baldwin for our closing market report. Ross, what did we see take place in the grains today?
Hey, Mark, thanks for having me. You could really say today across the grain markets, it was a turnaround Tuesday with most between corn, beans, and wheat just really reversing their losses or gains from yesterday. Corn finished the day were 3 cents higher here at the end of the day. Beans were 10 to 12 cents lower after being their sharp gains yesterday. And over in the wheat market, they had some solid gains with Chicago wheat 16 cents higher. Kansas City wheat was 22 to 23 cents higher. But keep in mind, yesterday, Chicago wheat was, I believe, 21 cents lower. Kansas City wheat was 28 cents lower. So all in all on the week, yesterday corn was 4.5 to 5 cents lower, and beans had their sharp gains. All in all on the week, I mean, corn still lower on the week, wheat still lower on the week, but beans are still holding on to some gains after yesterday's sharp rally.
And with that rally yesterday, was it just a combination of factors, do you think, that caused the soybeans to have that nice run?
Yeah, the weather still is the primary driver here across the bean market. And they didn't. Yesterday we're 30 cents higher, so today we're 12 cents lower. I mean, you're still up 20 cents on the week. So they didn't take all of that premium out of the market. I mean, really, you could say it was a lot of what we've seen recently is spreading corn versus beans. You'll have several days where corn's down, beans are up, and then they flip that spread. And I don't think today was really anything different from that. The weather in South America, there are rains forecast across those dry areas over the next 14 days. One weather guide that we follow, they're forecasting 1 to 3 inches of rain here over the next 2 weeks for the central and northern regions. But even with those rains, as they have heat coming into the forecast, even with those rains, they're still, some of those key growing regions are still going to be the driest they've been for the October through December 26 period and the December 1st through the December 26 period. It's the driest they've been in the last 40 plus years. So I would say we're far from being done with this South American weather story that for this time of the year is the main driver across the grain market. So we're not out of or South America's definitely not done trading that story yet.
And I'm not sure that we always, keep in context as well just how big Brazil is as a country, and the extremes that we can see in the weather can simply come down to just where it's located in Brazil because it is such a big country. It's not too dissimilar to what we have here in the United States.
Correct. It's such a vast growing area or growing region or country, you could say. And keep in mind the amount of production that they have. And so you've got the central and the northern area. They've been a lot drier than normal. The southern region, southern Brazil, has been wetter than normal. They're actually they're getting some relief down there, but then you also got to throw in there Argentina, and Argentina has been in very good shape weather-wise, especially considering where they came from a year ago. So I know they have some moisture moving back into their forecast, which is good. And with Brazil having some weather problems, keep in mind the increased acres they had there, and Argentina being as strong on production as they are year over year, that's where it's hard to get so wildly bullish and think you're going to see such massive cuts there because of the increased acres in Brazil and the increased production in Argentina.
And something else, of course, we'll have to keep an eye on with South America. Any changes that occur after the new change in government leadership in Argentina with the new president in place there. Ross, let's switch over to the other side of the ag marketplace and the livestock complex. What are we seeing taking place there today?
We saw another rally across the cattle markets, live cattle and feeder cattle. As most everyone across the marketplace knows, it's been just extreme volatility since we put those highs in back in mid-September. And last week we had another aggressive sell-off before we did recover Thursday and Friday across the cattle markets. And today's close, it did mark the third day in a row across fats and feeders that we closed above a previous day's high, which technically is a good sign. We are above, for fat cattle and feeder cattle, we are above the 9-day moving averages across most all contracts, which is another good sign. Short term, those are positive indicators. We do remain below the 20-day moving averages, which that's an area we have not been above for fat cattle and feeder cattle. I don't know off the top of my head exactly, but it's been 2 months since we've been above the 20-day moving average, or had any meaningful follow through above that. That is going to be a key spot to get back above. Like June live cattle, they're 50 cents below the 20-day. Nearby February, it's $2.50 below its 20-day moving average. Nearby feeder cattle, they're $1.50 below their 20-day moving average. But it's definitely more encouraging right now that we've seen this bounce that we have after the aggressive flush again last week. And it's interesting to note the last 2 days we have seen aggressive selling to where the markets have been down anywhere from $1 to $3 across fats and feeders, only to find buying going into the trading session or throughout the trading session and to close the day higher. So it's a good sign that we are starting to see some buyers step in and close us well off the interday's lows. I think for the cattle market, the cash market's been struggling as well, which it's no surprise given this meltdown we've seen across the futures market. But last week cash was solid 3 to 4 lower. The packers have been increasing slaughter. There are plants that are starting to ramp up Saturday slaughter. Their margins have gotten they've gotten better. There is more market ready fat cattle right now as well, but I think demand's good, or it's trending in a better direction than what people were fearful of over the last 30 to 45 days. So we do need to see cash start to find some footing and work back higher. And I'm optimistic that if we can see futures have a bottom to build off of, like we've seen these last few days, that we should be able to find some strength or find that spill over into the cash market.
And then what did we see take place in the hogs?
Hogs have really just kind of been consolidating down here. They haven't done a whole lot here from a future standpoint these last few days. They had a nice rally here recently, but we have pulled back just these last few days, kind of just been grinding lower. I don't see a whole lot here right now. Exports have been decent on the hog side of things, but keep in mind with the protein industry, the exports do end at the end of the year, and so we have seen you'll see business getting moved out into next year. We've seen that already occurring in the beef industry. I do think we'll probably see that into the hog industry here pretty soon. But hogs, I don't see a whole lot here for hogs right now this week.
Ross, what's the best way for our viewers to get in touch for more marketing information?
You can reach me directly at our office here in Anthon at 712-373-3276, or you can find any of the agmarket.net brokers at agmarket.net.
He's Ross Baldwin with agmarket.net. Thanks so much for the time here today, Ross. Have a great rest of your week.
Thanks for having me, Mark.
Thank you to Ross Baldwin with agmarket.net for our closing market analysis. It's time now for the closing numbers, and those numbers can be found on our website at iowaagnet.com.
March corn up 3 3/4 at $4.85 1/4. January soybeans down 12 1/4 at $13.23 3/4. January soybean meal down $2.90 at $4.10.30. January soybean oil down 69 cents at $50.42. Chicago wheat up 16 even at $6.25 1/2. Minneapolis wheat up 17 3/4 at 729 1/2. Kansas City hard red wheat up 24 1/2 at 656 3/4. And March oats down 2 even at 343 3/4. On the Merc, December live cattle up 72 cents at 167.70. January feeder cattle up $1.30 at 219.25. February lean hogs up 92 cents at 68.25. February pork cutout unchanged at 82.45. Class 3 milk down 4 cents at 16.19.
And that wraps up our closing market coverage for today. It is time now to take a break to hear from our sponsor, the Iowa Soybean Association and the Soybean Checkoff. And when we come back, I will be joined by Dr. David Newman with the National Pork Board.
Iowa Soybean Association is driven to deliver for Iowa's 40,000 soybean farmers. We're proud to provide objective agronomic research, a helping hand with soil and water stewardship, and timely industry news powered by the Soybean Checkoff. Learn more at iasoybeans.com.
In today's episode, I'm joined by Dr. David Newman of the National Pork Board as we discuss demand, also increasing market growth in international markets.
Mark Magnuson for the Iowa Agribusiness Radio Network, and I'm here today with David Newman. We are at the National Association of Farm Broadcasters Convention in Kansas City. David is the Senior Vice President of Market Growth. David, we're hearing a lot about demand for pork right now. What are we looking at?
Yeah, it's been a challenging year, Mark, for U.S. pork producers. That's no secret to us at the National Pork Board, and I would say that it's all hands on deck right now around demand. And what we're seeing is kind of an interesting shift in this demand cycle, still post-COVID, right? Where we're right-sizing the industry, if you will, because over the last several years we've had a tremendous amount of money pumped into the system. Think about SNAP benefits, think about these other pieces. And as we start to kind of normalize and we look at some of the market conditions domestically, it's kind of put us in a unique position that's been very challenging. But at the National Pork Board, on behalf of our U.S. pork producers, our goal is to talk about pork promotion, research, and education, right? But from my growth team, we're really focused not only on the international market development. 2023 exports were a shining star, especially when you think about countries like Mexico. Central Latin America has been very good to us, and some of our long-standing partners in Japan, Korea, and throughout Southeast Asia. I think the biggest push, and most of the questions we get right now, is about domestic consumption. So 70% of our production is consumed right here in the United States, and we have a lot of programs going on around domestic pork production or domestic pork promotion activities.
And switching gears then to the, export strategy and what we've seen there, you guys do a lot of work to build those overseas markets, those international markets. It just feels like you continue to see that expand with all the hard work that's being put into it.
Yeah, that's right. Yeah, we take producer dollars and we leverage them through the United States Meat Export Federation. We also leverage that with USDA MAP funding called Market Access Program. So we can literally take checkoff dollars and leverage them one-to-one, nearly one-to-one a year. So $1 million investment could be a $2 million investment for looking at market access. So it's a tremendous program. We have grown in exports year on year for a long time in this country. So as we start to see existing markets, just think about a very mature market like Japan, continue to be very strong for U.S. pork. We're also looking at new and emerging markets. And that's really important as you look at the rest of the world. It's still reeling, coming off of COVID-19 impacts, which lasted much longer than they did here in North America. And then you take into account that you have a massive population of people throughout the world who are becoming more affluent. And as they become more affluent, one of the first things they do is they buy more red meat. And luckily for us, pork is very culturally relevant in Asia and other parts of the world. And that's going to continue to be a shining star of opportunity for us here in the United States, because not only from a food safety standpoint do we have an advantage, we're still one of the low-cost producers, but we have a tremendous distribution network out of this country, whether chilled or frozen.
And, I don't think that the average consumer necessarily is aware of the importance of those overseas exports, because we know that other countries oftentimes use different parts of the animal, maybe not the same as different countries right next to them. So, it can change widely. And when I think about it, We see this all the time in row crop agriculture, trying to be as efficient as possible. And when it comes to the pork side, trying to be as efficient as possible by using every piece of the animal and using that to get the maximum value. Am I kind of on the right path?
You're absolutely on the right path, Mark. And I can give you some numerous examples of this. But if you look at different parts of the world, I mentioned people becoming more affluent. If you look at the actual income in many of the countries around the world, right, is considerably less than what we see here in North America. So a lot of these offal or variety meats have been a part culturally of the staple diet of people all around the world. And just to be completely frank on this, without those people eating offal and variety meats, we wouldn't have much of a market in terms of profitability, because that drop credit, that value that comes per animal for items you wouldn't think about every day, whether it was bones or kidneys or hearts or livers, those are massive in key regions around the world. Another good example of that would be Mexico, right, where we have exported hams for years and years and years, and also a lot of variety meats. But as the Mexico market starts to mature and we see the affluence, we're starting to see a huge gain in fresh pork items. 2023 was a fantastic year for bone-in pork loins, as an example. So it's kind of this evolution from offal variety meats into middle meats, which is what you would see more common in a Western diet. So there is a lot of opportunity out here globally for U.S. pork.
David Newman with the National Pork Board. Is there anything else you'd like to let our audience in Iowa, obviously a huge pork state, know about when it comes to the work that the National Pork Board is doing?
Mark, I would just like to say that we understand the situation. It's a serious situation, the challenges that are happening right now in the pork business. Our big push is not only on this export work we talked about, but it's on this domestic efforts that we have going on. So we're putting a very concerted effort into who the target consumer is and how we go after them to really reposition pork and make pork top of mind. It's priority number one. We're in the fight with producers. We hear you, and we're working on your behalf. So it's an honor to work for this business.
And I got to say, you guys are working on at least one person, that's me, because you talked a lot about ground pork in the last year, a lot about pork loin, and I found myself buying more of both of those.
Yeah, absolutely. Well, we can't discount the value of ground pork. So there's items here. There's a lot of opportunity when we look at just dishes and recipes. And pork as an ingredient is something we talk about with our multicultural audience as an example. So we can help people understand that pork lives beyond center of the plate. And it can actually be a part of really delicious recipes that are applicable across different generations and even different cultural or ethnic backgrounds.
David Newman with the National Pork Board, thanks so much for taking the time here to speak at Trade Talk 2023. Have a great rest of the show.
Absolutely. Thank you.
Thank you to Dr. David Newman of the National Pork Board for that interesting discussion here on AMPM. It is time now for a check of the weather. Sunny skies, the story for most of the state of Iowa today, with partly to mostly sunny skies. Tonight, mostly a quiet evening when we take a look at our forecast, and then for tomorrow, going to be a little bit on the cool side, but we'll have decreasing cloud cover as the day moves on. So let's turn our attention now to the National Weather Service and what's in store for the next 24 hours.
As you can see from the National Weather Service, partly to mostly sunny skies, high temperatures 33 to 38. Increasing clouds with chances for snow flurries this evening, low temperatures expected 21 to 28. For Wednesday, decreasing clouds, mostly sunny skies, highs expected 39 to 46. And now turning our attention to our affiliate weather map for Wednesday. Cherokee, sunny and 43. Shenandoah, sunny, high around 46. Des Moines, decreasing clouds, high of 44. Albia, sunny and 44. Waterloo, mostly sunny and 41. And Clinton, the cold spot on the map, sunny, but a high expected around 39.
For a more detailed forecast in your part of the state, make sure and check with your local Iowa Agribusiness Radio Network affiliate. And that's going to do it for our Ag Weather Outlook. That also brings us to the end of this episode of Ag Matters PM. You can find all of our content on our website at iowaagnet.com. You can also follow us on YouTube. And while you're there, don't forget to subscribe. Click on the notification icon as well. That will let you know whenever we have any new videos available. You can listen to our free twice daily market podcasts, which are found on Apple, Amazon, Google, Spotify, and Podbean. And don't forget to follow us on social media as well on Facebook, X, LinkedIn, and TikTok. From the Iowa Agribusiness Radio Network studios in Des Moines, I'm Mark Magnuson. For Riley Smith, Dustin Huffman, and Andy Peterson, we thank you for watching. This has been Ag Matters PM.